The 5 best dividend stocks for 2024. In this video, we will give you the top 5 dividend stocks based on the forward yield metric. Forward dividend yield is the estimated annual dividend yield. But first, we will explain some of the ins and outs of dividend stocks and dividend investing. Companies with dividend stocks regularly share a part of their profits with shareholders, typically every quarter, though some pay semi-annually or even yearly. The dividend yield is a measure that compares the yearly dividend amount to the stock's current price, expressed as a percentage. As a company's stock price shifts, the dividend yield adjusts accordingly, reflecting the changes in this ratio. In this video, we look at the top 5 dividend stocks listed on either the New York Stock Exchange, NYSE, or NASDAQ as measured by forward dividend yield, excluding companies with payout ratios that are either negative or over 100%. Why are these the best dividend stocks? We use forward dividend yield as the metric for the top 5 dividend stocks listed on the NYSE or NASDAQ. Investors prioritizing dividends are looking for a steady income stream alongside the potential for stock price appreciation. However, future dividends are not a given even for companies with a good track record. Dividends are adjusted. During moments of economic uncertainty, a company may reduce or cut its dividend payments altogether to preserve capital to weather storms previewed ahead. Alternatively, companies may increase their dividend payments in a bullish economic environment to attract investors. Changes in the percentage yield. These stocks may offer a lower dividend yield when facing different overall market conditions, changes in financial stability, and adjustments to their market value. Be careful. Some dividend yields can mislead. Some dividend-paying companies may increase their dividend yield to attract investors in the short term, though higher dividends can be unsustainable. How we pick dividend stocks? Investors should pursue companies with robust fundamentals, long-term profitability, and a sustainable dividend yield that has consistently increased for some years. How to find dividend stocks? When reviewing dividend-paying companies, it is notable that certain sectors, such as finance, energy, and real estate investment trusts, typically pay higher dividends than other industries. When picking the right company, investors should also pay attention to a company's peers to determine if a dividend yield is out of the ordinary for the sector. What should you look for in dividend stocks? Dividend yield. The dividend yield reflects the annual value of dividends received relative to a security's per-share market value. You can calculate this by dividing the annual dividend per share by the current stock price, though most brokerage platforms and financial news sites publish such information. For example, if company ABC issues a dividend of $10 annually with a current share price of $100, it has a dividend yield of 10%. $10, $100 equals 10%. Investors pursuing high-yielding stocks can start by screening for issues with a divided yield above a certain percentage. Keep in mind that dividend yield is only one of many metrics to consider before investing. Dividend payout ratio, DPR. The DPR gauges how much of a company's earnings are paid to shareholders. Investors calculate the ratio by dividing total dividends by net income. This, too, can be found on financial sites and other platforms. For instance, if company ABC reports a net income of $50,000 and pays $15,000 in annual dividends, it would have a DPR of 30%. $15,000, $50,000 is 30%. That is, the company pays 30% of its earnings to shareholders. Typically, a company that issues less than 50% of its net earnings in dividends is considered stable and has the potential for sustainable long-term earnings growth. Dividend coverage ratio. This measures the number of times a company can pay dividends to its shareholders. Investors calculate the dividend coverage ratio by dividing a company's annual earnings per share by its annual dividend per share. For example, if company ABC reported $10 million in net income with an annual dividend of $2 million to shareholders, it has a dividend coverage ratio of 5. $10 million, $2 million. Usually, investors see a higher dividend coverage ratio as more favorable. Now, the top 5 stocks for forward dividends yields in April 2024 are: Number 1, Diversified Energy Company, ticker DEC, with a 29.78% yield. Number 2, Ecopetrol, ticker EC, with a 23.68% dividend yield. Number 3, TORM, ticker TRMD, with a 20.62% dividend yield. Number 4, Eagle Point Credit Company, Inc., ticker ECC, dividend yield of 16.62%. Number 5, Okeanis Eco Tanker Corp., ticker ECIO, with a dividend yield of 16.51%. Investors pursuing dividend-paying companies should pay close attention to the overall financial condition of the stock they are planning to invest in. A company may offer a high dividend yield even when financially unstable, and it's important not to invest without a proper understanding of the underlying stock. Like and subscribe to Investopia. We are a new channel trying to gain traction with the algorithm, so hit that subscribe button for more great videos to help you achieve financial freedom.